Hey, good morning, everybody. How we doing out there? Hopefully, hopefully you're doing better than the market. um, yeah, pretty red day. Kind of just getting started. Kind of go through the news here in a second. So this is actually the opening range from yesterday. I haven't made any changes, but man. So are we down another 3%? Hey, guess what? No confessions. No confessions. I had quite a bit of work yesterday of, like real work. And honestly didn't even have a chance to even pretend to trade. So
XHG exchange.
There is that.
Announcing acquisition of insurance brokerage firm. That's X-Ray Hotel Wealth, XHG.
Sorry guys, I'm still kind of getting set up. I have definitely undercaffeinated for sure. So just got to get a couple other things logged in, set up.
Demonstrates soil safety profile in combination with tezolizumab for treatment of platinum-resistant ovarian cancer. And partial response at the highest dose. That's announced November. SONN.
All right, so sorry if you're just joining us. Not ready yet, and very likely am not gonna be diving into anything this morning. And if I do, we're just gonna take our time. Just take our time. That big wash at 7:30. That's pretty interesting, honestly. If that, just the shape of it and the volume, that might be capitulation right there. So hold on to your seats, kids. Might be in for some dips, but I say that every day, and look what happens. Look what happens, right? So definitely is going to be a day to be cautious. That range is just huge. Sorry, I'm just like deleting just random stuffs. So Okay. Alright guys, here we go.
S&P futures down 119, Dow futures down 930.
Jesus.
Down 438. Crude is down $4.72 now at 62.23. Natural gas is down 17 cents.
I have no intent to actually make this order, but
26.90 at 30.94. 20 Bitcoin futures up 11.35.
here's 22 ticks.
270. Fed Chair Powell coming up this morning at 11:25
Jesus.
Eastern Time.
Alright, so we're on the wrong accounts over here. So that's 22 ticks. That's $100 right there. Can't even see the lines. So that's definitely going to be like a blow up those accounts day. Does not get more exciting than that, right? Okay, so let's see here. If we flip through the news real quick. Sorry, I just got so many things going on at once. All right, happy news day. We got, let's just look at the biggies because there are some biggies. Non-farm payrolls for March was 228. That came out at 5:30, so that would be right there. So that reaction was about 560 ticks. And we're opening right at that middle bar, which is interesting. I gotta be honest, guys, I'm probably just gonna sit on my hands again. Again, I don't know. Yesterday, did not sit on the hands first 5 minutes. Cost me a couple bucks there. And all right, so news. So we got non-farm payrolls, we got unemployment rates, 4.2, which is a little bit higher than expected. 4.1. We got some Canadian numbers. Unemployment rate in Canada is 6.7, which was in line with expectations. And then we have Powell speaking at 11:30. So that's going to be like 8:30 my time. So what we want to do is we want to take this and we want to put it out there about 8:30, maybe a couple minutes before. Do that, do this, do a big old red bar. Okay. What do you guys think? You think we drop rates? Whew. All right, 15 minutes. I think if we trade, we're going at least 44 ticks. But I'm quite scared about this range, to be honest. That's nasty.
BTTR, better choice. Signs definitive agreements require SRXL solutions. That's BTTR.
Nasty, nasty, nasty. Nasty.
AREB, American Rebel shares spiking to the highs, $7.92 now. Alpha Romeo Echo Bravo, AREB. CISO, Global and Limited Convertible Debt. $7 million in convertible notes and holds have been extended on existing terms. That's Charlie, India, Sandy, and Oscar. Shares popping on that. AREB, American Rebel shares, more highs now hit $8.10. AREB.
All right, so happy Friday, everybody.
PYP.
Okay, so here we go. Here we go. Ooh-wee. Nasty out there. Yeah, I think I'm officially not trading today. I just locked it. Just would be brutal. That spread's huge. We got 8-9 tick spread. It's just not worth blowing up today. So if that's the case, then let's see if there's something else that we can work on this morning. Alright, so it looks like we got like 2 minutes.
President Trump said China played it wrong. They panicked, said great job numbers, says my policies will never change. One minute to the U.S. market open. S&P 500 down 133.84 after the open. NASDAQ is down 501.82. Down 982.18.
So I think the most impressive one for me, honestly, is the move in crude. We're at 60. Excuse me, $62.
EH said don't act on operations for recent years trying to tariff actions by federal government.
All right, there's our 5 minutes. Kind of feel like we should be trading, but it's just not going to happen. I'm not going to trade today. We got an insanely huge range. If you're just joining, again, no intent to buy here, but that one's 44 ticks, and like you can't even see it. So it just seems like we would get hurt really bad, really fast, and just can't get there. Just can't get there, guys. Just not worth the accounts, even the evals. So I think it's a sit on hand stay. Probably hang out at least through the Fed announcement just to watch it, but not gonna be a real exciting stream like all the other ones. Oh yeah. So if you're just swinging by, you know, say hi, you know, maybe we can talk about the weekend or something. So if you're just joining, yeah, the punchline basically, I'm just sitting on my hands.
ICCC Microconnect hitting 684 at the high voltage at the highs.
This, the range is just outrageously huge, like instant death to your accounts if you're wrong. So.
RMB.
So I think it's going to be a no trade day here. No big deal. Fine. And the big red bar there is for Powell speech. A lot of people are predicting he's going to cut rates. With the market as bloody as it is, would not be surprised that that's the case. So here's another crazy one, guys. ICCT, it's just straight up, going straight up. Tiny floater, rotated. Damn, even more. 750. So, I don't know. You guys doing anything this weekend? Probably not going to do much here. Just sitting on hands, sitting on hands. Not even doing anything. Do 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 do. Ba-do-do-boo-boo. So tempted. So tempted, you know, to play that middle reject if we get there, but come on, PropFirmTrader, you know better. Kind of looks like a normal chart, but you know, that range, oh my god. Yeah, just not happening. Just not gonna happen. Oh, those my puppies swinging by. Is that my puppies? Is that Sarah here?
Alright, so let's pop in here. Romeo Sandy. 47 cents, the high of 23%.
Oh, sorry, bud.
Circle life sciences for me. 10% less.
Yeah. So, what, 30 minutes here, and then still have a couple of hours, or an hour and a half before the Fed stuff.
Fancy the market update. S&P futures down 161. Dow futures down 1,082. Nasdaq is down 589. Crude is down $5.64 at $61.31. Natural gas down 23 cents at $3.90. Gold down $37 at $38.90. Bitcoin futures up 830 at 18,995.
Oh, Liberation Day. It's gonna be a little pain. That's pretty painful, man. That's, what are we, 20% off the top now? What a flippin' freak show. Okay, let's see what the Why do I do that? Why do I have to like start every sentence with the okay? Well, so U.S. payrolls unexpectedly soar to 228, above highest estimate. Feels like an end of history moment. Goldman macro trader warns they pushed too hard and broke things. EU could fine Musk $1 billion over illicit content, disinformation. Yeah, I don't know if I'm going to make it to the Fed meeting.
State Administration for Market Regulation of the People's Republic of China has initiated an investigation. DuPont reviewing claims in a report. That's DuPont. Shares of DuPont right now are just off the lows at 59.42, down about 12%. That's Delta DuPont.
Everything is crashing after China retaliates with 34% tariffs on U.S. goods. Well, pretty sure they were already at 34%, so an extra 34%. Beijing is looking to escalate the trade war further and forcing Trump to double down with even harsher retaliatory tariffs on China of his own, which at this point may push the blended tariff rate on Chinese goods above 100%. What followed instantly was sheer, unadulterated liquidation panic. S&P futures declined 4%, NASDAQ 100 down 4.6%, copper plunges more than 5%, biggest loss since July of 22. U.S. 2-year yield falls to 3.498%, lowest since September of 22. Brent oil drops below 65 for the first time since August of 21. U.S. credit risk gauge jumps the most since regional banking crisis. Stocks Europe 600 index falls 5%, most since March of 2020. Instead of writing, let's let the charts do the talking. Summarizing the bloodbath so far, S&P is set to record losses on 6 of the past 7 weeks. Volatility comes roaring back as VIX explodes above 45. The post-Liberation Day market has been a historic bloodbath. Bitcoin reversed all modest gains. So Bitcoin is 83.5 at the moment, 83,500. Bitcoin reversed all modest overnight gains. Yeah, it kind of had a nice little ramp there to 85, but just took a big old dump. Dollar's modest reversal higher was promptly halted, and the greenback reversed just as it was gaining. It wasn't just a dollar. The yuan, I think it's yuan, also tumbled, reversing its bizarre gains since Trump declared war on China. The market is bleeding, and more pain is clearly coming as this escalating trade war risks pushing the U.S. economy into a recession. Luca Polini, chief strategist at Pickett Asset Management, said over the phone, "It's not a surprise China would retaliate, but this would inevitably cause a recession because the damage is done, unless Trump backs off." Well, there's an alternative. An emergency rate cut by the Fed, which now looks increasingly likely because credit has officially cracked. But worse, just wait, there's more. The 3-year SOFR swap, no idea what that is, a metric of Treasury market stress, is on the lowest on record. Friday's losses follow a massive wipeout by U.S. stocks on Thursday that erased $2.7 trillion in value, the second biggest one-day loss in history, in the wake of Trump's drastic new trade tariffs, which ignited widespread recession fears. In a few minutes, investors will get a look at the latest monthly jobs print, the first major piece of data for the quarter, which would have a wide range of implications for bond, stock, and currency markets, as well as the Fed next moves, blah, blah, blah. Powell is scheduled to deliver remarks at 11:25 in Arlington, Virginia, which will be parsed for signs of weakness spreading to the workforce. The derivative market is pricing in more volatility ahead. Options traders are betting that the S&P will move roughly 1.6 in either direction after the jobs print today, which it certainly did not. That was the jobs print was this right here. Okay, blah blah blah. Lots of words. Oh, hi, Flocko. You need to go outside, buddy? Huh? All right. I'm gonna let the dogs go run around, get some more coffee, all that stuff. So, be back for another exciting episode of Failed Stock Trader. Be right back. All right, we're back. How we doing, guys? Yeah, pretty uneventful day. I haven't, no trades. This is 100% going to be a no trade day. Quite honestly, just scared of the range. Like if, let me show you what I mean. We unlock, and then I'll put it out here somewhere where we know we won't get filled. Like that is 44 ticks. That's 200 bucks. And you literally can't even see it. You cannot even see it. So, it's perfectly good if you're right, but you know, you're wrong, your account's gone instantly. So, just not gonna do it. Kind of just hanging out though. I do get to work from home today, so that's nice. Yeah, I don't know. I don't think I had any expectations for the day, but my expectations are definitely not being met. I don't know, guys. I don't know. Let's see. We could plan our weekend, maybe. Head up the Groupons. See if there's any fun wine tours or something. I don't know. But we... Hi, puppy. Hi, puppy. I hope everybody out there has a dog or 2 or 5. You know, dogs just make life so much better. Dogs just make life better. When they just walk by and they chew on your elbow. We have a ton of dogs. My dog's a little black dog, little land shark, velociraptor, whatever you want to call him. He's awesome. He's awesome. I'm so cute. I'm so cute. He sleeps with me. He cuddles me. He never leaves my side. He's the most loyal dog I've ever had in my life. And he is Australian cattle dog, German Shorthair Pointer, Black Lab. He was supposed to be Black Lab, but him's perfect. A little land shark, aren't you? A little land shark. And just a little guy. Just a little guy. Huh. What's that? What's that? Oh, I don't know. Okay, watch your toesies. I'm going to move the chair. I always run over your toe. Yeah, so I don't know, guys. I can't decide. I still got a solid hour before Pal talks. And so I don't know. I'm probably just gonna go on mute, hang out. Is that even worth it? That if anybody swings by, it's kind of wasting everybody's time. I'm not trading. No, one bad thing about my dog is he does expect to be touched all the time. He expects it. He expects it, and he gets it. But if you're not touching him all the time, it makes him very nervous, huh, Bucky? Huh, Bucky? Oh, golly. Oh, golly. You're the good boy. No, good. Come lay down. Come lay down. Lay down. Or not. You do whatever you want to do, buddy. That's fine. Yeah. You're the boss. You're the boss. You're the boss. So I guess I'm gonna get logged into work. Um, I guess I'll just keep the stream going. I don't know if you guys swing by, you know, say hi. Um, Not too much happening and not planning on trading anything, so there's that.
Fed's income market update. The S&P futures down 3.7% and continuing lower at 52.24. Crude down 8.8% and continuing to slide at $61.03. Seeing a low of $60.81 earlier. Bitcoin actually up 1%, 82,985. AIM, Immunotech shares were halted. It said on April 1st, company entered into agreement to sell shares of its common stock from time to time, an offering price up to $3 million. That's Alpha India Michael, AIM. AREB shares were halted at the highs, $10.02, Alpha Romeo Echo Bravo.
AREB, American Rebel shares resuming, hitting 1137 at the high, Alpha Romeo Echo Bravo. Shares right now up about 156% on AREB. And shares of AREB now are halted again on a circuit breaker on the way down, AREB. Sam Altman said we're going to release Q3 and Q4 mini, 03 and 04 mini after all, probably in a couple of weeks. That's ChatGPT. ARAB, American Rebel, share is resumed again right now at $9.70, up 142% off the earlier highs above $11. France's industry minister asked if he should put tariffs on Boeing, says no details decided, will be discussed next week. That's BA. Bravo Alpha. Shares of Boeing right now are just off the lows, down about 10.5%. BA Boeing. S&P futures bouncing off the lows now, 51.8425. Charlie Gasparino tweeted, I heard from Wall Street sources close to the Trump White House that Secretary Scott Bessent is trying to moderate, albeit quietly, the president's hardline stance on trade. If he ramps it up, it would be the first significant in-house battle in the new administration, pitting Bessent against Howard Lutnick and Navarro. That's from Charlie Gasparino, Fox Business. S&P futures getting a pop here now. Trump said had a very productive call with Tu Lam, General Secretary of the Communist Party of Vietnam. Told me that Vietnam wants to cut their tariffs down to zero if they are able to make an agreement with the U.S. Trump said, I look forward to a meeting in the near future. S&P futures now down 188, 52.47, moving higher. Coming up at 11:25, Fed Chair Powell speaking at an event. Shares of Crocs getting a pop here. Crocs are made in Vietnam. Nike also moving on that Vietnam news. Nike also made in Vietnam. That's NKE. SHOO, also Steve Madden, also on that Vietnam news, has some manufacturing in Vietnam. SHOO. AEO, American Eagle shares also getting a pop here now. American Eagle has a significant portion of its Production around 20% coming from Vietnam. That's AEO.
All right, guys. Getting real tempted to scoop a dip here. Let's see what she does. See what she does. 44 ticks.
Also, shares of Wayfair getting a pop here.
Right or right out kind of thing. Want a little more pullback. Getting right to that fib level. A little more. One more pull. Fuck. Missed it. Well, can't say we didn't try or weren't paying attention or whatever, but
RH was holding on a circuit breaker.
I just don't know. I just don't know. Little pissy that we missed that. It was a pretty decent setup, honestly. And that breakout trend, decent dip. Now I don't like it. Okay, well, missed it. You know, we were ballsing up, but
RH sources some which furniture products from Vietnamese manufacturers. Shares halted on a circuit breaker.
now I'm back to, I don't know what to do. Oh, coulda got in there. Single trade, made our quota. Darn it.
Trump said this would be a perfect time for Fed Chair Powell to cut interest rates.
Well, phooey. That's a pretty big miss. I was holding out for that tiny bit more.
Short Ninja shares halted on a circuit breaker, same in November.
Oh well. Look at that, bouncing right off the fibs. But really I wanted that tiny bit more. Just another itty bitty, which is probably like another 60 ticks or something, but oh well.
Shark Ninja shares halted now up 2.5% for the day.
Gonna be kind of here not here. Frustrating. Frustrating that we missed that dip. But, flip side, we're still alive. We have lost no money. We've lost no money today. That's a win of some kind. I don't know.
Klarna pausing its IPO after Trump tariff announcements. That, according to the Wall Street Journal. Shark Ninja shares continuing to pop here after resuming. Again, those comments coming out of Vietnam wishing to lower its tariffs down to 0. SAVA, Cassava Sciences here is getting a pop here. Sandy Alpha, Victor Alpha, SAVA. Shares of Deckers also popping on that Vietnam news. DECK, LEVI Levi's, LULU Lululemon shares spiking about almost $30 on that news. LULU. Fed Chair Powell said progress toward 2% inflation goal has slowed. Unemployment rate still in low range. Job market not a source of inflation. Surveys show dimming expectations. Higher uncertainty due to new federal policies, especially trade. Data shows solid growth. Labor market imbalance. Inflation much closer to but still above the 2% goal. Uncertainty high. Downside risks have risen, but economy still in a good place. Powell said outlook is highly uncertain with elevated risks of higher unemployment and higher inflation. Fed's obligation is to make certain that one-time increase in price levels doesn't become an ongoing inflation problem. Powell said most measures of long-term inflation remain well anchored, becoming clear that tariff increases will be significantly larger than expected. Same is true of economic effects. Fed's Powell said tariffs likely to raise inflation in coming quarters, more persistent effects possible. Powell said too soon to say what will be the appropriate path for monetary policy. That's from the Fed Chair Powell. S&P futures pulling back now following Powell's comments. Nikkei reporting Japan's Rapidus in talks with Apple and Google to mass produce chips. That from the CEO, reported by Nikkei.
Alright guys, so I'm back. I thought that I had it lined up to where we could watch the Powell conference, but apparently not.
said a grocery store consumer still upset about past inflation. It will be very challenging to say how much inflation came from tariffs. Weaker growth, higher inflation balanced out to keep Fed at two projected 2025 cuts.
Projected a slow. Total PCE prices rose 2.5% over 12 months in February. Core PCE prices, which exclude the volatile food and energy categories, rose 2.8%. Looking ahead, higher tariffs will be working their way through our economy and likely to raise inflation in coming quarters. Reflecting this, both survey and market-based measures of near-term inflation expectations have moved up. By most measures, longer-term inflation expectations, those beyond just the next few years, remain well anchored and consistent with a 2% inflation rate. Because there are likely effects on the economy.
Powell said
It's
uncertainty
not
is
our
high.
role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual-mandate goals. We have stressed that it would be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as the amount of tariff, what level of operation, and the extent of retaliation from our trading partners. While uncertainty remains elevated,
AREB
it is now
American
becoming
Rebel
clear
shares
that tariff
halted again
increases
at
will
the
be
highs,
significantly larger than
$11.39,
expected.
up 187%.
And the same is
now.
likely to be true of
That's
economic
Alfa Romeo
effects,
Echo Bravo,
which will include higher
AREB.
inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary
Powell
rise in
said risks
inflation,
of
it's
higher
also
inflation and
possible
higher unemployment
that
are
the effects
elevated.
could be more
Downside risks
persistent.
have risen.
Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored, on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation
Tariff
is to keep
increases are significantly larger than
longer-term inflation
expected. That
expectations
was,
well anchored,
earlier comment.
and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well
Powell
positioned
said
to wait
tariffs
for
are
greater
likely to
clarity before
generate
considering
temporary
any
rise in
adjustments to our
prices.
policy stance. It is too soon to say what will be the appropriate
Also,
path for
possible
monetary
effects
policy.
on prices could be more persistent.
We understand the benefits of a solid economy where workers can find jobs and inflation is low and predictable. We also understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. That is why we at the Fed will continue to do everything we can.
Our obligation is to
achieve our
keep
maximum
longer-term
employment and
inflation
price stability
expectations
goals.
well anchored.
Thank you, and I look forward to your questions.
Powell finished his initial comments. Too soon to say what appropriate path for monetary
This
policy will
feels like
be.
quite a moment to be speaking with you. I want to thank you for your time. He's got it. I want to thank you for being here, and thank you for taking the time to speak with this group of business journalists. Also like to give a special thanks to Heather Long with the Washington Post, who helped make this event possible. So for starters, sir, how's your week been?
Just fine, thank you.
Care to elaborate?
So far, so good.
Chair Powell, yes, thank you so much for being here and taking our questions. You were talking about the economy as being a very strong economy. You characterized inflation as coming down, employment as being very strong still. However, President Trump earlier this week, when asked about the market volatility we've been seeing, said the volatility was, quote, to be expected. This is a patient that was very sick. We inherited a terrible economy. A lot of voters did and do agree with that assessment, or at least in part. I'm wondering how you would respond to that assessment and the disconnect between the story of the data and the way a lot of people are feeling about the economy.
Sure. So let me just be clear at the start. I make it a practice not to respond to any elected officials' comments. So I don't want to be seen to be doing that. It's just not appropriate for me. But the situation, I think, is this, and people, when they're surveyed, they are unhappy about the economy. That seems to largely reflect the increase in the price level that happened when inflation was high, 2021, 22, and 23 largely. Inflation is now back down to much more normal levels. Unemployment is low. The economy has been growing, but people are still experiencing that high price level. In other words, prices don't go down. They know they're paying much more for the basic necessities of life, and they're right that they are, and they're not happy about it, and they're right not to be happy about it. So I think that accounts for the negative sentiment. We, of course, we're looking at inflation, which is the change in prices, and we're seeing that that has come down quite a bit, and that, you know, unemployment is actually low. It's sort of very close to measures of maximum employment, and the economy's growing. So all those statistics are good, but you know, the price increases of the past few years are weighing on people's budgets.
So I'm from Milwaukee, and I've been talking to business leaders, executives, and consumers in our community, in our region, for the last few weeks, mostly before this week's news. Chairman, they're troubled and they're nervous. One business owner told me, if there's a hint of a recession, we're cooked. And he asked me to share that with you. What's your response?
So I guess I would say, let's start with the fact that the incoming data right through this morning's employment report, which admittedly is from roughly a month ago, the week of March 12, they took the data in, it still shows a solid economy. Unemployment's still low. I understand the uncertainty that's weighing on people. You ask about a recession. We don't make a probability forecast of how likely it is for there to be a recession, but many outside
AREB
forecasters
shares
do,
resumed.
and many of them have raised the likelihood,
hitting,
albeit from very low levels.
12.15 at the high now on AREB shares.
Anybody now is forecasting. Or some people are starting to.
193% at the high on Alfa Romeo Echo
There's
Bravo.
not much more I can say about that. I realize that the uncertainty is high, and you know, what we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We still don't know where that comes to rest, though, and we're just going to have to see that through.
Powell said many outside forecasters have raised recession possibility.
Said that you were pretty boring, and you thanked him and said that you considered that a very high compliment. And in fact,
recession
I feel like it's
probability
one of the goals of the Federal Reserve, especially since the housing crisis, to be kind of a ballast, especially in the face of the volatility of the markets and the dramatics that we can experience with the economy. Very steady, no surprises, very reliable. In a moment like this, which also has a lot of drama and unpredictability, but it is not necessarily from an economic crisis. It's by design, it's political. How do you see your role in this moment?
So I think all of the values that you touched on are, in fact, the values that we try to live by. You know, we're driven by, you know, analysis and careful thought and discussion and debate and the merits of things. We try to stay as far as we can from the political process. We don't look at political cycles or things like that. So, and I think people expect that from us. They expect us to tell the truth, and that's what we're going to do. But at the same time, we don't want to be part of the broader political discussion about the wisdom of policies that are not assigned to us. We're not responsible for trade policy, immigration policy, fiscal policy. So we don't comment on those. Decisions are made by others, and what we do is we use our tools to try to achieve the goals that Congress assigned us, which is maximum employment and price stability. So I like to think that over time we're a source of calm, rational analysis and also of stability. That's really what the business that we're in is, providing financial and macroeconomic stability to the public. That's really our purpose.
So how can businesses and individuals and the Fed make plans for the future when so much is being dictated by the actions of a single person? And do you see yourself as the consoler-in-chief on economic matters?
No, I think, take a step back. What's happening is, as I mentioned, the new administration is making, you know, significant policy changes in trade, immigration, fiscal policy, and regulation.
And this is you're still just a couple of months into the administration, and that process will take place. And at a certain point, the new policies will be on the table. They will be having the effects they're going to have on the economy, and uncertainty will decline. Right now, there's a lot of uncertainty about where all that's going to sort out, the forms it will take, and what the economic effects will be. If you fast forward a year from now, the uncertainty should be much lower. The actual effects of the policies should then be pretty manifest and clear. So I think I understand why it just is highly uncertain, both what the policies will turn out to be, exactly what they'll turn out to be, and also what their effects will be in the near term. We just have to go through that process, and it is just kind of a manifestation of our election cycle and a new administration coming in with new policies.
I mean, given all of the change happening and the fact that we are in a period where things have not settled in yet, and that the Federal Reserve and you as chair are very projection, data-driven, policy-driven, how do you handle a moment like now?
Trader circulating a report from Marijuana Moments says marijuana rescheduling isn't on the White House's new list of top drug policy priorities.
What we've had since
under the Trump administration
in the last few months is from the staff has been a placeholder. Rather, they wouldn't call it a forecast because it's so uncertain. They call it a placeholder, and that's kind of how we've been thinking about it. So it's a good time to take a step back and let things clarify. That's why it's just too soon to say what the appropriate monetary policy response will be to these new policies. It is just too soon to say. We can't say with any confidence today. So that's what we're doing. We've taken a step back, and we're watching to see what the policies turn out to be and the ways in which they will affect the economy, and then we'll be able to act. Fortunately, our policy stance is in a good place for us to do that. We're probably moderately restrictive, let's say. So it's not really tight policy, but it's which is appropriate since inflation is a bit above target. So we think we're well positioned to address whatever may come. And in the meantime, I'd say we're waiting for greater clarity before we consider adjustments.
Business owners in Wisconsin have told me that they can't make their plans. They want to expand. They want to build a new facility. They want to hire or do whatever the future calls for. They say, we're trying to look around the corner. We're not even sure where the corner is, and we're not even sure what's around the corner. Sounds like they're in the same position as you are a little bit.
No, we hear the same thing. Of course, we have an incredible network of contacts with businesses and also universities, nonprofits, all different sectors, through the Reserve Banks and also through the Board of Governors. And that's what we hear. But again, it's a process. We're going through it, and I think we will know when we know what the policies are exactly and what their implications will be for the economy. That will all become clear, and I think that'll be a time when people can make decisions. In the meantime, though, I get it. We're hearing that a lot from people, and we are kind of in the same place, which is waiting for clarity about what our policy path should be.
It might be months away.
We'll have to see.
Yeah.
As you're talking about placeholders right now and having something in the place when there's so much that we don't know, it does occur to me that this is not the first economic shock that you have steered the markets and the economy through. Obviously, there was COVID almost exactly 5 years ago. It seems similar in certain ways with a lot of uncertainty, a lot of shock, also potential disruptions to prices and to supply, which is very much in the Federal Reserve's wheelhouse. I mean, from where you sit, can Liberation Day be compared to kind of the economic effects of COVID? Are they totally different, somewhat related?
I think each situation is different. There was COVID. There was also then, in the response to COVID, then there was high inflation, and then there was soft landing, and now we have new administration and changes in policies. And every situation, it kind of rhymes, but it's not exactly the same thing. And so in this situation, what we face is what I mentioned in my remarks is you actually have risks for higher unemployment and higher inflation, and that's difficult for a central bank because our tools, which consist of interest rates, either slow down or speed up the economy over time, and higher unemployment would call for speeding up the economy, and higher inflation would call for slowing it down. So you can be in a situation, if we find ourselves in that situation, we look at how far each of the two variables is from its goal, and we ask ourselves, how long would it take to get back? And we weigh those things and make a decision about what to do. But there's no question that's a different situation, very difficult situation. When we faced high inflation, it was painful for the country, painful for the people that we serve, but we knew what policy needed to be. We knew we needed to raise rates quite a bit. During the pandemic, we knew what we needed to do. It was very clear the direction that we needed to take with force, and we did.
It's almost a situation potentially where the dual mandate is at odds with itself.
The two goals are, as we say, in tension, or they may be. I'd say that's not what we're seeing right now, but it's the effects at the margin right now would be for higher inflation and perhaps higher unemployment, but that's a marginal effect. I would say you're not in a situation like we were in the 1970s where the two goals were really both pulling in opposite directions and required. It's just very hard for a central bank to be the answer to a situation like that. But that's not the situation we're really in today.
One of the questions from the audience that we had is, if unemployment takes off and inflation takes off, which lever do you go for? What do you do?
So we actually have we have a document called our consensus statement, or the longer version is Statement on Longer Run Goals and Monetary Policy Strategy. And the 6th paragraph of that actually contemplates when the two goals are in tension. And what it says is, think about how far each variable is from its goal, and think about how long it would take for each to get back. So in a way, it's an equation. You're comparing two quantities which each have two variables. And then you say, you look at that and you think, what do we need to do? And typically this doesn't happen very often, but if one of them is further away, then you would focus on that one. In the case of high inflation, they actually both pointed in the same direction. The labor market was overheated and inflation was very high. So both of those called for tight monetary policy. This could be different, but again, we're not actually facing that today.
I feel like there's another tension inherent in your job, which is that you're looking at the macro economy, at the global economy really, and the U.S. places in it, but also the data you're looking at is very profoundly human, as Jim has been pointing out. Jobs, I think, and prices are probably the two most human pieces of data, and certainly in our day-to-day experience, probably the things that loom the largest. How do you reconcile those two things when you're looking at the data, like both the global markets and knowing that the data represents a lot of lives and jobs and egg prices and things like that?
So I think at the Fed, we always keep a focus on the people that we serve, and we know and are very conscious daily that the things that we do have a real effect on people's lives. We know that, and it really does focus the mind. And I think if you talk to people at the Fed, there's a very strong commitment to serving the public as well as we possibly can. Economic events are just very, very unpredictable at times, and there are shocks that you can't see coming. But nonetheless, our job is to, whatever happens, use our tools to bring the economy back to stability, back to price stability, back to maximum employment. And that's what we do. But you're right. We try to keep everybody in the room with us when we're thinking about what to do.
So in response to the last round of tariffs, Harley-Davidson, which is based in Milwaukee, moved some production to Thailand. Now the company might be whipsawed again by the new tariffs. It could be really devastating for sales, for employment, for the future of that company. But a lot of companies are in that same position. And what do you say to companies like Harley-Davidson and their workers?
So it just isn't, I really want to stick to our knitting. I mean, we have this great thing called our independence of monetary policy, and that's critical for us to be able to do our job. But for us to keep that independence, we need to not succumb to the temptation to want to be a player on issues that are not assigned to us. And trade policy is one of those. There are many, many issues that people love to try to pull us in on, almost every issue, really. And we just need to stick to our knitting, not get pulled into those things. And so trade policy is a classic one. Energy policy is another. Climate change, immigration is not really, although all of those things have economic implications, and it gets argued that way. But if we treated those as our job, the case for our independence would disappear. So I really can't comment I mean, we hear the same stories like that, but honestly, the policymakers who are charged with that, they're probably hearing the same stories too, and they're reaching a judgment about what's in the best interest of the country in the long run. That's what they are doing, I guess, and that's, so it's not for us to comment on that.
What happens inside the Fed at a moment like right now, when there's so much change and quite a bit of uncertainty? When you're watching things unfold, what does that look like, practically speaking? What are people doing inside the building?
So I'm very proud to work with the people I work with. I can tell you that in times like this, or times like the pandemic, where the global financial markets were shutting down, the global economy was shutting down, people step forward and they say, "We've got this." These are career people who were here for the global financial crisis. They've got 25 years, 35 years of experience with crises, and they step forward and it's just incredible what they can do and how good they are. It's a great honor to work with them. So right now isn't that situation. We have the situation we have. So, our trade people and our inflation people and our macroeconomists are all working hard to,
Vietnam
to
party
kind of
leader
digest
to
the news of this week.
phone call with Donald Trump that
try to
according to state
filter that
media.
into the forecast that they'll make. And policymakers are doing very much the same thing, and we're reading everything we can about what's happening and lots of outside analysis too. We don't have an FOMC meeting until May 6 and 7, so that's really a process that lasts several weeks, but
moving up
we're not quite at that
slowing,
stage
but not
yet.
clear what the
But
path of
we're kind
monetary
of
policy
thinking
should be.
ahead to that and working through all of that. I will say though, it feels like we don't need to be in a hurry. It feels like we have time
Really?
to, yes, it feels like we don't. No, I mean, it's like I said, you have inflation's going to be moving up and growth is going to be slowing, but it isn't really, to me, it's
Berkshire
not
Hathaway
clear
said
at this
reports
time what
currently
the
circulating
appropriate
on
path for
social
monetary
media
policy
regarding
will be.
comments
And we're going to need to wait and see how
allegedly
this
made
plays
by
out
Warren
before we
Buffett
can
are false.
start to make those adjustments.
That's from Berkshire
Question from the
Hathaway.
audience. One of our SEBU members is, are you in contact with other central bankers in other countries at a time like this?
Yes, pretty frequently. Absolutely, I am. And the same was true during the other crises I've been through. Not only that, though, we do meet very regularly. The IMF World Bank meetings here in Washington twice a year.
Powell said
We
will
go
not
to
comment on
Basel
what international
multiple times a
colleagues
year
are
to meet.
saying.
That's all central bankers. And there are also G20 meetings, G7 meetings where the central bankers are there. So we're kind of regularly meeting and talking. And when we're not doing that, we're also texting each other.
Is there a group chat?
I'm not at liberty to say. No, no, there's not.
And have you talked to those central bankers this week?
Recently, yeah, I didn't want to get too specific about this, but yes, I have.
What's their sentiment? Can you characterize that?
I'd rather, again, I don't comment on what my international colleagues say, or it's not appropriate. But we're talking about events, we're talking about the implications for the economy. We're discussing what we're hearing from markets and from business people and from the elected governments too. It's all the things you would expect us to be talking about on a regular basis. It's one of the best things about this role is that the central banks have a lot. We're all non-political, so we think about things in quite similar ways, and they're real bonds. We're not lobbying each other ever on policy. That's just not a thing, because we do our policy here, they do their policy there, but we develop really, really good relationships and bonds with them. And it's one of the real pleasures and benefits being able to talk about this, just not only with the great people at the Fed, but also with the leaders around the world.
I mean, it's interesting because it is a job of enormous responsibility and power, but it's also a job. How would you characterize the job of Fed chair? Like, how is it as a job?
Honestly, that's what it is. I really feel just like another person doing that job.
Really?
Yeah.
You just like...
That's how it is. I'm doing a job. I have a job to do. I actually really like the job. I like it a lot. I enjoy it. It can be stressful at times. Nonetheless, incredibly interesting, great people to work with, really important. What more could you want? But That's what it is. And, again, I'm blessed by working with great colleagues who are really committed to getting it right. I mean, fully appreciate how important it is that we get it right, and do everything we possibly can to bring the best thinking, the best analysis, and debate things, over and over until we feel like we're in the right place. At the same time, there is no certainty in this. You can be wrong, because the economy can zig when you thought it was going to zag.
So your term as Fed chair ends about a year from now. What do you think about your job security?
I fully intend to serve all of my term.
Excellent. I mean, as we're getting close to wrapping up, I did want to ask something a little bit out of the box. I think because you do have a position of such great responsibility, people are very curious about
Powell said he intends to serve out
and
his
I think
term.
people tend to read into everything a Fed chair does, small gestures, word choice. I know it's part of our jobs in this room to pore over every word you choose. I did want to ask about one thing that I've wondered about for years, which is your tie. You always seem to wear a purple tie, and every time I think I've seen you, you've worn a purple tie, and I'm wondering if there's significance to that?
Well, at the beginning, the only significance was that I like purple ties.
Okay.
But I will say, so then the next press conference, I reach for a blue tie or a red tie, and I go, maybe not, And so I wind up wearing purple ties. And then it becomes a thing, and now I definitely wear purple ties all the time.
Okay.
But I felt like, it just felt a little awkward to be wearing one that was identified. We are strictly non-political. I can't stress that enough. We are not, it's not that we're bipartisan. We are non-political. We don't do that. And so purple is a good color for that. That's all. Plus, I like purple ties.
Sorry, I didn't give you a purple guitar pick. I have one other Milwaukee question that I overlooked here, but in Milwaukee and other parts of the country, the housing market is out of whack. In our market alone, in southeastern Wisconsin, there's 5,000, the market's out of whack by like 5,000 houses that need to be on the market for it to have equilibrium. And a report this week said tariffs could tack on some $6,000 to the cost of building a new home. How long are people going to sit on their cheap mortgages from COVID? Thank you very much. And before they move on, before the market frees up.
So you have several things there. The first is we just haven't built enough housing, and we haven't kept up with the demand for housing. So there's an underlying shortage. Before the pandemic, there was a real housing shortage. And by the way, that's happening in many comparable democracies around the world. The second thing is, lock-in, as you say. There were very, very low mortgage rates during COVID.
Powell said new building may face cost pressures for a long time. We will see upward pressure on housing, given lack of supply.
Costs of materials that might be imported, lumber and nails and things like that. And yeah, and also labor. A lot of labor from in the home building business has been traditionally immigrant labor. So yeah, the sort of new build market, it may face some cost pressures as well. That may very well be the case. That's what we're hearing from home builders, for example, both on the labor side and on the materials side. But even once these short-term things happen, we're still going to have not enough houses. And so it's all, I think for a long time, we're still going to see upward pressure on housing prices, maybe until population growth slows or until we catch up.
You mentioned that we're kind of in a period of waiting right now to see how policy ripples out through the economy. How long do you expect that to take? How long do you expect these big policy changes to show up in our day-to-day lives, in prices and supplies and things like that?
For a while, we didn't know what was coming on April 2. Now we know what came on April 2. We don't know. There's a lot more to be said about how all that shakes out. But we've come through that, and I think you now know that the tariffs are larger than people were generally expecting. That much you know now at this point. And you'll know more as you start to see the effects on the economy. So, as the months go by, it's hard to say exactly when you'll know. But, clearly that learning process is ongoing. We're just seeing that these are new policies, not just the tariff policies, but the other ones as well. There'll be, important fiscal legislation coming up fairly soon. And there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be. So I can't give you a date, but all of that is now kind of coming into place at sort of the speed you would expect policy changes to be, and then we'll begin to see the real economic effects as the year goes on. But again, I can't give you a really specific date.
Is the fiscal legislation the tax cuts?
Well, yes. I mean, I know they're contemplating, and again, we don't comment on fiscal policy, but what I read is that they're contemplating
BLIV
making
IPO is
the
open for
Tax Cuts and
trade
Jobs
now.
Act
Bravo
cuts
Lima
permanent,
India
and also
Victor,
perhaps some other
priced
things
at
as well.
$4 now at $3.70.
We have sort of a
Opened at
placeholder for
4.
that too, but
That's
it's really
BLIV.
not ours to comment on. But that's what I was talking about. Yes.
So I have a question from a friend in Milwaukee who said she has clients that have deals ready to go, businesses that are ready to launch from their garage to a private equity deal, and they're just stuck in their garage right now. How long do you think, what do you think the impact of the uncertainty these days will have on the private equity deals?
So again, we're hearing a lot of that. People are they're just kind of waiting for clarity. So, and I can't tell you when that will pass, but ultimately it will pass. We know that at a certain point we'll know enough to know what the uncertainty will decline, and we'll be able to see with real clarity what the policies are and what their effects are. So. But
Fetcher
you're right,
Powell
we hear
said
the
people
same
are
thing
just
from
waiting for
businesses
clarity.
and from people that they're kind of waiting and seeing. There's a lot of waiting and seeing going on, including by us, and that just seems like the right thing to do at a time of elevated uncertainty.
What economic indicators are you watching right now? I mean, very famously, you look at the CPE and obviously the CPI and things like that, but are there any economic indicators in this moment, in these circumstances, that you are watching, focused on,
Sure.
interested in?
So the basic two big data pools are the data around prices and around employment. And we get in the employment area, we get just really that's an area where we actually get pretty good data. Although the survey response rates have been lower, nonetheless we get a lot of different data. And it's not just unemployment, it's participation, it's by age group and things like that. It's wages, it's many different things. It's jobs, it's quits. All the job creation, quits, openings, all those things. So that's one thing. On inflation, we target PCE, personal consumption expenditure inflation, not CPI, and the two are broadly they move they move together. But 25 years ago, the Fed switched to PCE. The public looks at CPI. It's kind of a little bit of a thing, but because we think it's really just a better way to capture the inflation, the cost pressures that households and businesses feel. We think it's a better measure, and that's what we look at. But they're not that different. I mean, they're just they look at different measures. Ultimately, they're pretty close together. Those things. On growth, you look at what's happening with consumer spending. The economy is overwhelmingly driven by consumer spending. So you look at how are consumer surveys, how are they feeling, how are they spending? Sometimes the surveys are very negative, but they keep spending. That's been happening really for a while. People spent right through the pandemic, and they spent right through this time of higher inflation. They kept spending, and forecasters kept thinking, like us, kept thinking that consumption would slow down. But that's a really critical thing. After that, business investment is a big chunk, and you look at that, and that is also susceptible to sentiment. Businesses, if they don't know what to do, they're not going to do an acquisition. They're going to hold off on building a factory or a plant or hiring people and things like that. So we look at, I could go on for a long time. We look at a lot of data, and we try to make sense. We also talk to people who are in the real economy. I grew my career was mostly in the private sector, talking to people who ran businesses. And for me, the story doesn't come together until I actually hear from people who are in the economy doing things and what they're feeling and seeing, and then it sort of fits together better.
Is this like via the beige book, or
just the beige book? Thank you for mentioning the beige book, and I hope you read it.
I love the beige book.
See, that's great. Everyone should read the beige book. The beige book comes out sort of mid-FOMC cycle, and it's all the 12 reserve banks and all of their incredible context, what they're saying about what's going on in the economy. So if you want to know, you can look at the national data, but if you want to know what's going on in regions and at different industries, you look at the beige book. So it's really a critical thing. And actually, the reserve bank system that we have is an enormous strength of the Federal Reserve System. We have these 12 reserve banks with their own, economics departments and own participants on the FOMC. So that's a great thing to look at.
I'd like to ask you about another body of work that many of us know that you're familiar with, and that's the Grateful Dead. So, question for you, sir. American Beauty or Terrapin Station?
American Beauty.
That was not even a
Not
pause.
even close.
That was
Ask me a
too
hard one.
fast.
Working
No,
Man's
that's my era. That's my era.
Working Man's Dead
Yes.
or Europe 72?
Oh, both. Yeah,
Well,
that's
come
my
on.
era. We're in the same era here. So that's, for me, it's late 60s to mid 70s. So
Touch of Gray? What do you
AREB 1796 now, up 200, up 342% at the high. Alpha Romeo Echo Bravo.
All right, guys.
S&P futures moving lower right now, down about 256, about 4.75%.
So I got kind of caught up in work stuff and literally forgot I was still streaming, so I apologize for that. Gonna shut it down. Not gonna trade. Just done. All right. I hope everybody has a great weekend, and we will see you on the flip side.